Welcome to the deep dive. Today we're jumping into something pretty heavy. What our sources are calling a deep-seated affordability crisis in Canada's housing market. And this isn't just, a temporary price spike. We're talking about a systemic failure that's been building for decades. Our goal here, to really unpack the core structural drivers and figure out where policy seems to have gone off the rails.
Yeah, and to really get the scale of it, you have to look at the numbers over time. It's quite stark. We're not talking about a normal cycle. Nationally, think about this. The average home price went from about $120,000 back in 1990 to over $827,000 by the end of 2023.
Wow, that's astronomical growth.
It really is. It shows this fundamental split, this decoupling of housing costs from what average Canadians actually earn.
Okay, let's unpack that decoupling, because that's the crux of it, right? That feeling that it's just mathematically impossible for so many.
Exactly. That's the word. Impossible. Housing costs just exploded, but average household income growth, it's been really sluggish. We're looking at maybe 1% per year in real terms over the last 2 decades. Purchasing power just hasn't kept up at all.
Not even close.
And here's where the data gets really sort of eye-opening. You look at the RBC affordability measure.
Right.
In Q2 2024, it calculated the slice of median pre-tax income needed just to cover ownership costs.
And the numbers were?
Astonishing. 98.6% in Vancouver.
98.6.
Yep. And 77.0% in Toronto.
So for your average household, owning a home is basically out of reach unless you have significant outside help, like an inheritance or something.
Precisely. It signals a market that's fundamentally broken for the median family. It just doesn't work.
Wow. And the way people are even attempting to bridge that gap, I guess, is just by taking on an enormous debt, right? You see it in the household debt figures.
Yeah.
That credit market debt to disposable income ratio, what was it?
It soared. 174.9% in Q2 2025.
Oof. That's a worrying number. People leveraging themselves to the absolute limit.
Just trying to keep up. Yeah, it's a huge amount of financial stress.
So, okay, we've got this massive disconnect. Where do we point the finger? Is it mostly about just not building enough houses?
Yeah.
The supply side?
Supply is definitely a huge piece of the puzzle. Absolutely critical. The imbalance is severe. Look at 2023. For every one housing unit started, Canada added 5.1 new residents.
5.1 people for every new build start. That's the highest ratio ever.
On record, yeah. And the CMHC, the Canada Mortgage and Housing Corporation, they estimate we need another, 3.5 million homes by 2030?
3.5 million more homes just to get back to some kind of balance.
It's a monumental task. But that's not the whole story.
Okay.
The other key driver here is the financialization of housing, how housing is treated more like an investment. And critically, this pressure is mostly domestic. It's not primarily foreign buyers, despite the headlines sometimes.
Really? Because you hear a lot about foreign investment.
It's a factor in specific local markets, sure, but nationally. Foreign ownership is maybe 2% to 6% of the housing stock. The bigger issue is multiple property owners. Canadians owning more than one property. They hold nearly a third of the housing stock in key provinces. Think about Ontario condos in 2020. 42% were investment properties.
42%. So the average buyer isn't just competing with other families, they're competing with investors looking for returns.
That's a major part of it. It shifts the dynamic entirely. People saving responsibly are suddenly up against those accumulating assets.
Which brings us to the policy response, or maybe the lack of an effective one. You mentioned the National Housing Strategy.
Right. The NHS, billions invested, very ambitious goals.
But
the criticism is quite stark. Fewer than 5% of the units actually created through it were affordable for the lowest income households.
So it missed the target population almost completely.
It seems that way, yes.
Yeah.
It didn't reach those most squeezed by the crisis.
And that failure, it doesn't just affect individuals, right? It has broader economic impacts.
Oh, definitely. This crisis is a huge drag on the whole Canadian economy. Think about productivity, competitiveness. It severely limits labor mobility.
How so?
Well, workers, even skilled ones, simply can't afford to move to where the best jobs often are the major urban centers like Toronto or Vancouver. The cost of living driven by housing is just too high.
So it locks people out of opportunities and slows down the whole economy.
That's the argument, yes. It's a structural impediment.
Okay, so if the past policies haven't worked, and the problem involves both supply and this domestic financialization, what's the path forward?
Well, the consensus seems to be moving away from this idea of trickle-down housing, the belief that just building more high-end units will eventually help everyone.
Right. That hasn't panned out.
No. We need something more systemic.
Yeah.
Tackling supply bottlenecks, yes, but also looking seriously at curbing that speculative demand.
Which leaves us, and you, the listener, with a final, maybe provocative thought to consider. Given that domestic investors hold such a significant chunk of housing, what might actually happen if policy directly targeted that accumulation? Imagine, for instance, a progressive surtax, something that kicks in significantly for individuals owning, say, 3 or